Hi, welcome to this video today, which is on the 2nd of February. We're on Sunday. We're just going to take a look at what we consider to be really good risk-reward trade setups for the week ahead. Now, in terms of this week's forecast, plenty of charts and setups to look at that we think look really good. We'll go and take a look at them in a moment. Now, last week I was saying that I felt the week ahead would be really good. It actually turned out to be better than I actually expected. It was a great week. All the trades we were focused on came right in a big way. I've done some pairs and updated them already. One of our favourite plays obviously being the pound against the commodity currencies, 1,800 pips up at the moment. Also some emerging market currencies, they're really going well. And some of our other plays doing really well. Very focused at the minute in terms of long GBP, long USD and long yen on risk currencies. In terms of last week's forecast, I was saying, the stock market will have a big influence on the Forex markets, which it did, and I think it's going to be the same this week. Also, the Chinese virus still very much in the news. That's going to have an impact as well. Looking for a really good trading week ahead, so let's go and take a look at the charts. But just before we do so, please do keep in mind, it is my view as of right now. It can, of course, change in line with market conditions and action. If you want all our trading techniques and our daily technical sentiment analysis of 14 Forex pairs, you can simply click on the link beneath this video and you'll get live access to our member centre. Right, let's go and take a look at the Forex pairs. And just before we do so, I just want to take a look at the stock market. Again, like I said, it will have a big influence on Forex pairs next week. So let's take a look at it and look at what the potential impact could be. Then the best Forex pairs as we see. S&P 500 daily chart first of all. And in terms of the S&P 500, base out here, you can see where my cursor is on the left. We'll go up, we try and get to new multi-year highs, but we can't. Come down, don't reach support. Then we're off to new multi-year highs. And just look, we just keep going. Low volatility. And last week, you can see some bigger candles broken down a little bit. And that has hurt the risk currencies, okay? But if we break this 3,200 level, volatility is really going to go up in the market. So it's a low volume rally. Strong bull markets tend to be supported by rising volumes. This rally here, low volume, and now we're topping out. We could break hard. 3,200 is the level we need to see give way. That will really increase the volatility in the Forex markets. Even if we chop around sideways, I don't think it's going to help the risk currencies. They're going down. You can see the S&P 500 on the weekly chart. This is just a bubble. When we come and rally here, look at that for a rally. It's a fantastic rally. Okay, get some retracements. Could get another one. I think this one could be a big one. There's just so many problems in the world. Obviously, the Chinese virus still having an impact. As we said last week, I think the Chinese, well, they hid how bad it really was, which was a mistake. Now it's kind of spreading, getting worse. It's probably going to get worse before it gets better. But even without the Chinese virus, slowing global growth, slowing global trade. Stock market's just too high. And I just think they're going to be coming lower. 3,200 is the level to watch. Now, in terms of last week, also keep your eye on crude oil, because crude oil has a big impact on the commodity complex generally. So if crude is going down, yes, it can hurt the petrocurrencies like the CAD, the NOK, the RUB, but it hurts all commodity currencies. Why? Because when crude oil sells off, so do other commodities, okay? And it's a big fall. That is 21.2% from the spike high. As we're still going lower, how about rallies? Well, I don't see significant rallies at all. We should get to monthly support at 45, and fair value for crude is really 30. If crude continues to sell off, it will weigh on the commodity currencies and also on risk sentiment. So you should keep an eye on these two contracts for the week ahead. But let's now go and take a look at the Forex pairs. And I'm going to start, first of all, with the majors. I'm going to look at Euro USD first. I'm going to take a look at Euro USD just before we do so. Just for anyone who's a member of ours, I updated all the charts this weekend, so you can go and take a look at them. I think we could get a lively Asian Open. My AM update tomorrow will be for the normal time, 10:30 UK time. Now, let me just bring this up a little bit bigger. This is the most boring pair at the moment of all. I wouldn't have any large exposure to it. We don't. It's just not really moving. You're better off trading the Euro proxy. Some great opportunities in the correlated currencies, which we'll come to in a moment. But I know a lot of people follow Euro USD, so just very quickly, I'm going to give my view, which is the same as last week. Haven't changed our position in at 111.80. We've rallied back to 111, but historical low volatility. My own view is limited upside and potentially a lot of downside. If you're trading the euro short, you get the additional bonus of attractive carry interest in favour of the USD. But this is a very boring pair at the moment. If you were wanting to come into it, my own view is, yeah, you get a nice rally on Friday. It's only 70 pips, isn't it? That's how low the volatility is in this pair. I'll just sell off the level through 110.70. So if we retreat from the level, we go through 111, then just sell back through the round number. Euro upside will be capped, I think, by the carry interest. Yeah, big institutions are just hitting it and holding it for the carry interest. As long as it trades sideways or doesn't do much, yeah, if you've got good leverage on the euro, that carry is really attractive. So we've just moved our stop down to 111.50 for a stopped out, 30 pips, no big deal. We'll sell back through the round number. I don't think there's anything good going on in Eurozone, which I've said before. It's near recession, central bank, negative interest rates and stimulus, not going to help the economy or the currencies are going down. But a rather boring pair at the moment. So let's go and look at some more exciting pairs, or any pairs more exciting than the euro at the moment. GBP USD. Now, I did say in my video that I did on the commodity currencies, I prefer having a big exposure there. But GBP USD, I think it's going up as well. So no harm in trading this pair. 130.40 in. This 130 level here is really strong support. And we pushed off it, obviously came off the level. Now we're at 132. So 160 pips profit. Not big, but okay. But we finished nice and strong on Friday. So at 132, I'll just come in through 132.30, clear of the round number for continuation. Or if we dip to support, just wait for strength and come off the support levels. Now, the reasons I'm so bullish of the British pound, I've outlined in previous videos I've covered in the GBP against the commodity currencies. I'm looking longer term for the whole Brexit decline to be retraced. Pound just so deeply oversold still. Okay, so 145 longer term. So pound for us is bullish against a number of other currencies, or the majority of other currencies. I'll come to some others in a moment. Now, next major we're going to do is going to be AUD USD. Now, regular viewers will know we're hammering the commodity currencies against the USD, obviously the GBP and the JPY. And this one's going quite nice. Still same position as last week, in at 169.80. Came off that level and we failed to break higher. And a nice tumble. So near enough 300 pips. How much upside has the Aussie got? I don't think too much at all. This is pretty strong level, very strong level, the 68 level. Level in between as well. I would sell rallies or break lower. Going down to 63, we could even overrun that number, but getting to 63 will be near enough another 400 pips. Yeah, the background for the Aussie, not good. Obviously it's affected by falling commodity prices. It's affected by the big slow up in China, and that Chinese virus is making the slow up even bigger, and also the fact that recent trade agreement was no more than a truce. In the Australian economy, nothing is really going right. A central bank will probably have to cut rates. Obviously, you had the bushfires as well, which have impacted on the economy. So limited upside and a lot of downside. So it's a big trend in motion for us, and we're looking for more downside. Any rallies look good selling opportunities. 68 now is kind of our level in the sand. I just don't see it going through the level. I think the Aussie's been a little bit oversold in the short term, but rallies, selling opportunities. Right, let's move to the next pair. Japanese yen, we're just out now bullish of the yen. And when we came up here, this is monthly resistance. Okay, really strong monthly resistance above the 110 level. We couldn't, force out the monthly resistance. We fell back through the round number, so we can just come in at 109.80, and she's at 108.33. It's only about 150 pips profit on this one, but I think this one could really become a mover. I mean, the yen is just for us out and out bullish longer term. Bank of Japan, I pointed this out in our last video, they're not going to be doing any more stimulus. They're not going to be cutting rates more negative. So that bad news is in the price. Okay. Big fiscal stimulus package in the economy, which is going to help longer term. And obviously you've got risk off. Risk off really accelerates. It's going to help the yen. But even if it doesn't, I don't think the yen has got too much downside. Very oversold. Nice red candle on Friday. If I was coming in fresh, I would sell back and look for rallies to fade this resistance level here, just above 109 and the 20-day moving average. If we're really bearish of a pair, we like to see that 20-day moving average snap, and it has. Long way to go on the downside. 105, possibly 100 longer term. Yen for us, very, very bullish of it, and really good looking yen pairs around this week. We're going to cover a few more in a moment. Now, moving to the CAD. CAD, this one's been a bit of a slow mover in our view. I thought it would fall a bit harder, or the USD would push up a bit more strongly on a higher volatility. We got down here, just got back in through the round number 130.10, and I thought we'd really take off and accelerate, but it's been a pretty slow rise, taken a good few weeks to get to 132.30. So basically, 220 pips profit, but not much downside in this pair. I think you can key off the the support levels, or buy continuation. We should long term go to 140. CAD, obviously a commodity currency, similar kind of backdrop to the Aussie. It is hurt, when you got risk off, also commodity prices falling, slapping global trade and growth, which I think I've already said. So I'm looking for this one to accelerate to the upside and break daily highs, and then up longer term to 114. Now let's take a look at cross, which we like as well, which is a yen cross. So I just need to go over to it. Where are we going to go? Where is it? Oh, here we go. It's going to be Euro USD. Let me make my charts a bit bigger. So, sorry, Euro JPY. Euro JPY. Been bearish of this for a good while, and it did have a really good rally, and we got up here, try and take out the 123 level, couldn't do it. Just came in came in straight away, and we come down to 120.18. So again, it's an okay profit. I think this one here, I think we might rally back to the 121 level. This level here, pretty strong. It's the 20-day moving average as well, which is broken, okay, here. So back to there. That looks really firm resistance, okay? So basically 121 to 121.30 in that zone, we'd expect Euro rallies to fade. So sell rallies, okay? Or come in below that candle tail low there. It's also a round number. I didn't draw a level of support in there, but it's a round number, so it's naturally support through that tail down to 116. And I put chart lows as our target on the daily chart, but longer term, our target is the 100 par level. So this could have a lot of downside, okay? So I really like the look of it as a long-term position trade. So sell rallies or breaks of the roundup. Obviously, I'm bearish of the euro longer term, very bullish of the yen. Right, let's go and look at some other pairs, some more crosses and some USD pairs. Some USD pairs and then some crosses, but this pair here we're looking at is USD NOK. Lesser looked at pair, probably on your trading platform. I always say, look at the lesser looked at pairs. Very often give you great opportunities, and this was a great opportunity. I did a video on it when we first took the trade. Now, what we know in terms of this pair is what is Norway. It's the it's Europe's largest oil exporter. We think oil is going to get hammered, which it has. And when we fell down here, USD was really correcting overbought. A weekly support level, we find support on this candle here, or we exhaust. No more sellers, blue, coming on that candle. Red, can't get to there. Blue here, the tail can't get to there. It's confirming to us the USD is probably going up. Then we want the snap of the 20, we get it. And then right up to target, which is chart highs. We've taken 50% of our trade off, and I'm leaving 50% run because I still think crude has got way more downsides. I put target of 10. If we get stopped out, it'd be great profit anyway on the second trade because we're tight behind first level support. So I think it's, I say it all the time, but look at the lesser looked at pairs and also intermarket analysis, looking at crude, looking at the S&P, for example, can really help you. I wish all trades went as well as that. Alas, they don't. But when you catch them, really good, fast moving pair, nice profit. And it's a euro proxy as well. So if the euro had have really crashed to the downside, that would have given the USD even more impetus the upside. But it went up anyway, so good pair. Next pair, and I'm very focused on this next week, and I've covered it in a video yesterday in terms of trading breakouts. This pair, watch the full video if you're interested in it. Base is out. We break through here. Record net short speculative position. If that exits on stop, which we anticipate or think, we will gravitate all the way back up to chart highs. I covered the USD RUB and USD ZAR, which have already broken up in yesterday's video. This one looks like it's getting ready. You can check the full video out if you're interested in the three pairs. Right, moving on to the next pair. USD Czech krona, a euro proxy. And USD kind of made a move up and now it's coming back to support. Now, if the euro goes down, then basically that's going to help the USD go up on the Czech krona. But the euro is just hanging about. But even if the euro doesn't go down strongly, the USD for us is still going up because the Czech krona is a real risk currency and it's really overbought on the USD. Coming in fresh, just buy through this level, should get up to there, and then 26. You can go and look at the monthly chart. The monthly chart looks really attractive. USD so oversold. Again, lesser looked at pair, but I like the look of it as a long-term trade. Now, here's a pair. Did a video on it a few weeks ago. We thought the NZD would have a nice reversal against the USD, JPY and GBP, and now that has come to fruition. Nice rally up here, and we got above the 67 level, stalled. Very often we're bearish, we just sell back through the round number, 66.80. Get through the 20-day, a little bit of a battle, trying to get back above it, can't, down, down, down. So this pair confirming a big downtrend. It's not too bad. It's basically 220 pips so far, but way more to come. Chart lows, then down to 60. Now, if you wanted to come into this pair, bounces to the resistance levels, just watch for them to fade. This is really strong, this 66 level, 20-day moving average there as well. If you're really bearish, I say this frequently, if I'm really bearish, I'll just drop a small trade in anyway. A retracement will come. You can drop it in on the retracement, another trade. But if we continue to the downside, you're in. And I think of the commodity currencies, the NZD from here might fall the hardest because the market thinks the Central Bank of New Zealand will not cut rates in the next year. They'll cut in the next few months, in our view. Speculators that would do bullish of the Kiwi going down. So nice looking pair. Yeah, Kiwi's got similar backdrop to the Aussie. The Aussie's fallen a bit harder. This one, I think, will play catch up. Okay. What do we got next? USD SEK, another euro proxy. Nothing good going on in Sweden in terms of the economy, and the USD's gone up. Quite choppy. It's quite a volatile pair. It's going to chart highs in our view. Come back a little bit and key off these support levels here in the mid, or go on a breakout going to chart highs. So it looks good. Now, in terms of, I am just so bearish of the commodity currencies. This is Euro NZD. Now, I'm bearish the Euro against the USD, the JPY, and the GBP, but I'm out bullish against the commodity currencies. So if you're not a USD bull, you might prefer going long the Euro on the commodity currencies. Saying to a few people on Friday, just buy the breakout, and the breakout duly occurred. Would I buy this one where it is now? I'll probably wait for the first pullback. I think we're going to 76. So, look at the euro on the other two commodity currencies as well. If you bearish the commodity currencies, but you're bullish the euro, good trades in our view. Now, some of our favourite trades coming up. Commodity currencies, short on the JPY. This one made a really nice move to the downside. We got up here, couldn't get to these candles. We went straight in through the 20-day moving average and cleared the round number. It's nice one-way traffic to the downside. This has confirmed a big move to the downside. 74 is really strong resistance. If we come back up towards the 74 level, the 20-day moving average is dynamic, it'll tuck in behind, and that should be hard to take out. So key off that level on a rally. I've got our stop at 74.80, but I'll bring that down when I do my update tomorrow. Now, in terms of pair that's just getting ready to go, is CAD JPY. We haven't got much out of this one yet. 82.80 in, 81.84. So just 100 pips. But look where we are. We've taken out the 82 level, 81.84. Buy through the low, 81.70. Clear of the round number. She should go down. Any bounces, 83 is good resistance. Again, that 20 will sneak in behind it. It's a round number. Stop can be behind there. Just getting emotion for fresh trades. I think it looks attractive. Going down to 79. Longer term, going to 70. So I'm looking for this one to play catch up on the Aussie or the CAD to go down quickly now. For us, commodity currencies, well, you probably gathered it, short on the USD, short on the GBP, and short on the JPY. Good long-term plays. Now, have we got anything else in this section? No, I've covered the GBP commodity currencies in yesterday's video, which you can check out. But really nice move to the upside, going way higher. Now, I just need to get my menu back, and then we'll just go and look at the final few pairs. Sorry, I just need to get my menu, and I need to get my page, which hopefully will come in. There we go. Let's bring that up in size. Let's go to the first pair. USD rub, that's one of the emerging ones, obviously breaking up. GBP CAD, covered that yesterday. USD SGD. If you're a trend follower, this looks pretty attractive. The USD, big fall. Base out here. Now we're off to the upside. Slower moving pair, but in terms of, exposed to global growth, trade, China, Singapore, heavily exposed, going down a long way, or the USD is going up a long way. Chart highs, then 145, and I don't think you need to risk too much. 135.60, I'm just tucked back here. So I just buy a positive open, or key off the support levels. If you're a patient position trader, I think this one, a long way to go to the upside. USD PLN, this is correlated with US dollar Czech krona. They both move in a similar fashion. I'm doing them both as one trade. Come off, or sorry, come up. You can see there, I've drawn the level now because we got away from it. But nice support here, gone up, a little bit of a retracement. I just buy back through there. And then we could go to chart highs, obviously here, then 420, which is up here, stop behind here. Looks a good trade. And the last trade I want to look at, there's another emerging market, which I covered in yesterday's video, which you can check out. This one, I really like the look of it. Surprisingly, or not surprisingly, it's the NZD short on the JPY. Really like the look of it. You know, it did get up strongly, broke back, tried to get up to the chart highs, holding the 20, comes back through, down, and looking good. And I think for this one, in terms of this one, it's just getting in motion. You're sitting on a round number, 70. If you want to come in lower, just clear the round number, say 69.70, or take bounces back to the resistance level. 20-day moving average is coming down as well to provide resistance. Long way to go on the downside. Obviously, I put the daily chart lows there as first target, but going down to 60. Longer term, another 1,000 pips, hopefully. So we'll see. They're kind of my favourite pairs this week. I think, last week, it was just a very good week. Everything goes right for you. I don't want to be complacent because things can go wrong. But the way I see it coming into the new week, we've got some nice trends in motion that look like they're going to continue. We've got some breakout trades that, like USD MXN, for example, which could be becoming big trends. Obviously, we break out. But volatility picked up a little bit last week. Hopefully, it continues this week. Obviously, things can change, but last week, very, very happy. A week ahead, I'm hoping we're going to all have a good week in the markets. We shall see. But that is the weekly forecast for this week. Thank you very much for watching me. As per usual, take care. Have a good day.